Does your business structure suck? It's what the two business guys are masterminding on today. Setting up your business so that it wins and not loses. Enjoy. This business podcast, the Two Business Guys Mastermind, uncovers for you secrets and share tips and tricks to entrepreneurship as they mastermind on how to have startup, operational, and overall business success so that you can go on to get better results. Enjoy. Hey everybody, we are back. The Two Business Guys are masterminding on a particular subject that I think you're going to like, and it's really about the foundational items related to your business, right? John had a class, and in the class, the questions were so many questions around these areas that we're going to be talking about today that we thought we'd want to come on and, mastermind on these things. So John, take it away. What kind of questions were you getting? What seemed to be the trouble that these were all of them brand new entrepreneurs, or some people were already running business, they just didn't understand some structure things?
No, most of these businesses were existing businesses. And it's very interesting, but I've run across this and so many times in the past 12 years. And even myself, a lot of the things that I spoke about on Thursday night were examples from my personal life in finding out things the hard way. The problem is when small businesses are limited on resources, and Randy, you know this, you're wearing 50 hats. You're everything from the marketer to the person emptying the trash cans.
Absolutely. Absolutely.
And CFO, everything. So we were talking about some of the structural things that are very important to the foundation of a business. And it's only from ensuring that you have a strong foundation can you build the rest of the business from. And everything from individuals that have set up sole proprietorships, which don't give you any umbrella protection away from personal. So you're absorbing all of, in even a partnership, you're absorbing, you and your partner are absorbing that liability.
That's why a lot of people don't like partnerships, right? I mean, I'm just adverse. I've had a couple of partnerships that just were, just didn't do well. You know, you questioning, the other partner, about some practice or whatever causes a potential problem, or, they roll up in a nice brand new something, and you're like, where are you getting this money from, man? All the way from that. But you're saying these foundational things is just what people didn't have. They kind of thought that they had some protection under, oh, I got an LLC, I'm good.
Yep. So, a partnership is not usually set up under an LLC, but that's one recommendation that I would give is that you do, and that set it up under an LLC, and you make the owners what's called stakeholders.
Two LLCs coming together, and then they create one?
No, just two individuals come together, create an LLC instead of a partnership, just a regular plain partnership. Like a doctor's office is a perfect example, or a dentist's office is a perfect example, a law firm, perfect example of a partnership of the old kind, and how that is changing to more of an LLC structure. And instead of being partners, your stakeholders, member stakeholders. And it gives you that little added protection. But a lot of small businesses don't understand, and I didn't understand this either many years ago, that even when you have an LLC, which automatically gives you this little umbrella of protection, that umbrella is breached when you set an agreement with a financial institution or any other type of institution that requires the owner to personally guarantee anything. So what that opens you up to is personal liability.
It can kind of pierce the veil
Absolutely.
between the protection in how you do business. Now we're not lawyers, everyone, but lawyers do come in sometimes and inform our group. And I know what they do on your side, John, but in the entrepreneurs that I talk with, we have a lawyer come in, right? Business lawyer
Hmm.
come in and talk about that. And that's the part that's really eye opening when they say, "Oh, I thought an LLC was going to say, I thought the C corp was going to save me. I thought," right? And then he goes, "Well, it really doesn't." He says, "You might as well be operating in certain cases. You might as well be operating as a sole proprietorship
Now
because."
I'll push back on that. I We had some really good attorneys several years ago, and one way to mitigate that risk is to set up a trust, and put your personal assets in that trust. Because even if something were to happen
Sure.
and they were to, a business or whoever, if someone was injured or whatever, were to try to come after your personal assets, they can't touch anything that's in a trust.
And that's because the trust is separate than you,
It
right?
is.
So it again,
It's actually its own
yeah.
entity.
What are some of the, and this is some of the other questions that your group had, right? It was just full of questions, chasing you out of the parking lot, trying to find out, hey, I need to know more about this. Just these foundational things, and that digs into again, heavy on the attorney side. But if you understand about protection, what is the thing that can protect you? And I've heard of people doing this too, right? And I've set up not actual trust, but other things that kind of protect, my assets, right? Specific things that is designed to protect them outside of what activity I do. But you're saying that trusts, because they're on separate entity, can you now treat a trust? Can a trust pay you? Can you got your assets in these trusts, but then when you go to sell it, you're not selling it. The trust has to sell it, right?
Well, no, no, no. So you're putting your personally owned assets in the trust. So like your home, so your mortgage is in there, your personal bank accounts are in there. This isn't the business's accounts, but this is to mitigate the liability on you personally if someone were to come out after you. They're not gonna take your home and your life savings.
Man, how many people don't know to do stuff like that? So talk with your attorney, everyone, as you're hearing this. Talk with your attorney and find out how you can make these kinds of trusts that protect you. And it would it depend, John, on the kind of business you engage in. You got a lawn care service, you got bakery. How much how much liability are you really going to have?
So this is one of those things that we underestimate. But let's say you are a bakery and you something happens with the recipe and it gets sabotaged or whatever, and people get sick. I don't know, anything. Just pick a
Mhm,
scenario. I mean, you're letting yourself open to liability. So insurance and all of that stuff is
mhm.
very, very necessary. Even if you're a marketer and you give bad advice, people could come after you. Um, so it is important that, regardless of the industry that you're in, um, that you do start putting protection. Lawn care is another one. I could say that, hey, what if you hit something and break it in their
Yeah,
yard? Maybe you
I
bust
saw this the other day.
the
I
whole
went over.
sprinkling system or whatever. I mean,
Yeah, yeah,
you
yeah.
it, you have to protect yourself. Um, there's always a scenario out there that gets you thinking, that, oh man, I'm not as secure as I thought I was. Example, several years ago here in Grand Rapids, there was an excavator, and he and one of his team members, they were doing some work and they didn't put a trench box, and
Yeah.
the hole that they were digging collapsed and killed them both. They couldn't get out.
Yeah, you've
But
seen
it's
those
one of
trench
the
boxes, everybody. You've seen like this as dig site, that big metal something. You're like, what is that thing? big metal, and it's got like, it typically has 4 pillars, and it's big and long, and it's metal. Well, that's what they sit inside of, where they're excavating, where they're working to keep from having something collapsed on it. Well, you're hearing that over in Florida, right? Depending on when you guys are hearing this, you're talking about that condo. Boy, the first thing I thought of, the condo that had partially collapsed. People buried, some already dead. And I thought, man, whoever owns that condo, they're in trouble. And then, of course, the stories start coming out that there was some Florida professor that had been telling them for years that underneath them, that the ground underneath them was either, eroding, whatever it is, right? They're in trouble. So not only whatever they own is going to be potentially attacked, right? Because you're going to have the opportunistic lawyers going after it, but everything that they've ever had money in to get that money out. If they didn't have, you said something, John, insurance trusts and insurance.
Yep, commercial
Commercial insurance.
liability insurance. And it's not just good enough to go to your corner insurance agent and get business insurance. Yes, they offer it, but if you're in a niche industry, that I can tell you from experience that these agencies don't deal with enough of these specializations to understand fully what type of risks you encounter. And examples would be, hey, I work near waterways sometimes, and so you have to have a special rider for your insurance policy that allows you to work near the water in case something were to happen. Um, it, I had a massive propane tank on one of my properties one time, and I was told that that was never included in the risk evaluation of my. Well, if that would have blown up, that would have blown up all three of the buildings, the commercial buildings that were on that property, and hurt or killed people. And I was never covered for that because the insurance company at the time that I was with was one of those on the corner. I had to bring in a specialization company that was able to look at things holistically. And then when you do that, you're going through what's called a broker, and these brokers can shop the market, and they understand through their database which insurance companies deal with these certain types of companies. So you could be, and I'll give example, Bitco. They do a lot of utility insurance work. They understand the inherent risks within that entity. So you want to be insured by a company that, like Bitco, when you are in that business. And the same thing is true of any industry. You want to be able to find that company that understands your industry to the fullest knowledge, and that they have a portfolio built around your industry.
It's funny you say that specialty insurance. I was reading something about a YouTuber that got sued recently because they went on and they were dogging out somebody, somebody's process, somebody's style, and they got a letter,
Mm-hmm.
right? And his insurance company had to, pay a couple of bucks. So you talk about marketers, right? We talk about the errors and omissions insurance, errors and omissions. You say the wrong thing. That's why, sometimes you say on what you're doing, I am not an attorney. We are not attorneys. This is information that we've come across and we're sharing with you, but we are not giving you legal advice. Right? We are simply making suggestions. We're just two business guys masterminding on some stuff. So, some of that stuff protects you, but at the same time, if you're YouTubing and you say the wrong thing, or I remember a long time ago when Oprah Winfrey was sued by the meat. Remember she was talking about something, and the some meat coalition came after her, right? Because she was affecting the sale of cows and stuff. I think it was in the meat industry, and they came full blazing, man. wanted to sue for millions of dollars. I think it was more than millions, but anyway, yeah, Ranchers Association or something. I can't remember. So, and you think about some people just, they just litigate if you've affected their business. You go in front of a restaurant and say, hey, listen, this is terrible service and blah, 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 don't eat here. And you start running people away. Well, guess what? You can be sued. So, or for that matter, you're on one of your cooking things or whatever, right? Let's say you are a person that goes in and evaluates these different places. I would be assured that you would have some kind of errors and omission insurance, right? Because somebody hit you with a defamation lawsuit or anything. So, is this the kind of stuff that you had people just going, "Hey, I need to know more information about this. Tell me more about trust. Tell me more about the partnership agreements. What about that? It's just me
So
and my buddy. We started something. What should we do?"
so my the advice that I've given for 10 plus years, and I wrote an article several years back, but I would edit that article today and say 10 plus years, I would have said the four types of professionals that you need to surround yourself. And I'm talking about, you need to have counsel. You don't bring them on staff as paid staff, but you need a commercial attorney, not the attorney that 1 week they're doing a bankruptcy and next week they're doing a divorce. I'm
One
talking
that
about,
has a specialty.
yep, that understands contracts, that understands the industry and different risks.
Mm-hmm.
Commercial insurance broker.
Mm-hmm.
Um, I used to say a banker, a business banker, but I would change that to a business coach now. I think a banker is necessary, but a business coach is far more important. And then the fourth one is I have insurance, accountant, accountant, commercial accountant would be the fourth one. Um,
And I like
and
finance guys versus accountants.
yes,
I
yeah,
want somebody with a finance degree, maybe even
the
finance and economics versus a straight accountant. But I get what you're going with this because I can get a
so
bookkeeper.
yes, but here's the thing about accounting. Yes, you could get a finance person to do the day-to-day stuff or a bookkeeper to do day-to-day stuff. But when you're talking about laws, accounting laws change so fast and they change so often that unless you're keeping up with that, unless you're dealing with that on a regular basis,
So
then you're
CPA,
gonna,
then kind of
yeah, CPA.
somebody that goes a
And,
little bit deeper than just accountancy, just taking the money from and putting it in a bucket.
oh yeah, much deeper than that, much deeper. And you're talking about, there are specialized accountants for agricultural because there are certain federal programs and write-offs you can use that are just for that niche. And these things are all over all over the various industries. You talk about depreciation as well.
Uh-huh.
If you, let's say you are lawn care and you have a whole bunch of mowers and plows because you do plowing in the wintertime, well, are you depreciating those assets
Uh-huh.
over several years?
Uh-huh.
Um, and, that's, if you're not doing those things right, um,
You're leaving
it
a
could
lot of money on the
really,
table.
oh yeah, absolutely.
So it sounds like that the problems that you were facing in the class, maybe there's a whole bunch of other people that just didn't understand that structure. So let's kind of review a little bit. The LLC, the sole prop, the C corp. All right, there's a lot of information out there. Which one is best for you? Um, Having commercial insurance. So doesn't matter if you have a physical product or a service-based business or a information-based business, that some kind of insurance would be a good idea to cover you. And then the partnerships agreement. What about those, John? I know, man, I have recoiled when I see a partnership agreement unless it was flexible and on one hand and not too full of legalese. Once I get that, and we've got some things going on that there still need some signatures on, and I can tell you the resistance has been it's the way they sound. right? It
Sure.
was a little bit too legalese. I'd have to, put my $200, $300 an hour attorney on it. Now I got costs associated with something I haven't made money from. And we'll get to that in a minute, everybody. Here's what you should have, yet these things cost.
And well, can I break into that a little bit? So if it's a business that there are going to be multiple owners, my opinion is, and like I said, seek legal advice. Would be an LLC, and to split the ownership and you become
Mm-hmm.
stakeholder members. Now, when I'm talking about partnerships in the context of today, I'm talking about memorandums of understanding. I'm
Okay.
talking about contracts.
Mm-hmm.
So if I'm subcontracting to someone, those types of partnership agreements, like non-disclosure agreements,
Mm-hmm.
non-compete agreements, that you're setting the tone for that business relationship. And
Yeah. Yeah.
those it's so important to define your relationships, because when we fail to define our relationships, expectations aren't met. And expectations aren't met because individuals were different, we perceive things differently, we communicate differently, and so we're not bringing that to light and hashing that out,
Mm-hmm.
where that we have different expectations as individuals. So that's why it's so important to have everything. And people say, oh, you don't trust, da, da, da. It has nothing to do with that. And I'll in other types of agreements I'll go back on is, if there are multiple owners, you want to have things in place like, what happens if somebody becomes incapacitated and they can't do their job, or they
Mm-hmm.
pass away? What happens to their shares? Well, heck, you might not like their spouse or their children or
You
whoever,
don't
and
want them
not
taking over the
yeah,
business.
you don't want them so do you have a key person life insurance policy to buy them out, and that already a part of the plan that has been agreed upon? So, for example, um, let's say that there are 3 member stakeholders. You would write that out ahead of time, and you would say, in the case of so and so's incapacitation or
Station or death.
death,
Yeah.
that the stocks revert to back to the company,
Yeah. And if
and
you got a
this
trust, maybe it goes
yeah,
to the trust.
and the key life insurance pays out to the family members.
That key
um
person life insurance. Yeah.
yep. And you want to specify, like, within, it has to happen within 90 days, yada yada yada, but you have to be as detailed as possible, because all of a sudden what happens is these things happen and nobody thinks about them ahead of time, and you're dealing with a person that you're incompatible with, that you can't do business with, that doesn't understand the business. A number of issues that has a history of not being ethical. You know what I mean? It
Yeah.
could be a host of things. You want to protect yourself ahead of time, with agreements on every way. And going back, um, to insurance really quick, I wanted to touch on something, because a lot of nonprofits think that, hey, I'm a nonprofit, I'm doing good, I don't need insurance. But we've seen over the last several years nonprofits being sued, because of child abuse allegations of board members and various things like that. There are different types of insurance to actually put in place to
Mm-hmm.
protect a
Mm-hmm.
nonprofit for that as well. Um, because if you have somebody out there doing things and you don't know about it as a nonprofit, you, do you want that to, if that's
That
brought to light, do you
blowback.
want that to, yeah, stop? Do you want that to shut down the whole operation of the nonprofit? So, in protections against a number of things, malfeasance, let's say that you have an event and somebody gets in the car and they've had too much to drink and they get in an accident. Do you want that to be shutting down the operation?
Right.
Do
Right.
um, And yes, these are important things.
And
I,
costly things. So we gotta dig into the money on some of these things, John. Right? Because what you just, it's scary, especially for the person that's got that idea. But are there areas where you can? And this is, I'm gonna go back to the spreadsheet, everybody. I wasn't always a spreadsheet, wonk, but now it's when you put that in, because we're talking about commercial insurance cost to have somebody on retainer as your CPA or your finance person, your business coach cost. Now we've got these other things that consider costs, right? And now, if you're not putting that in your spreadsheet to get to your, long before you determine your break even level and your profit level, all that, if at least you've got those as line items, here's what I went out. This is going to cost me, $100 a month. And this is, again, you're putting together your whole entity. You kind of think you're going to be out there, making some money, but then you haven't included these line items, and something happens, or you come to one of these meetings and you go, man, I should get that. Now you plug it in. That could be the difference between you making a profit and not.
mm-hmm.
You being able to get some funding and not. And I would assume, John, that your funders are going to look at that. Well, I don't see insurance here, so you put us at risk.
Absolutely.
I don't see this partnership agreement. So who are you two people sitting in front of me, or three people sitting in front of me? So now what? Right now, let's get into the next one. You seem to be getting a lot of questions on, and that's 1099s.
Absolutely.
Are you
So
1099ing people after, what is it, $599, six hundred
yes,
dollars?
$600. But there's another aspect to that as well, is that, and this is what I want to talk about today, is people stating that everybody is a 1099 employee.
Yeah,
If you are setting the standards of that job, if
yeah.
you are
Come into the
setting the,
office at 9.
yep, if they are solely working for you, they are an employee. They are not a 1099. So there's a lot of uh, businesses out there
Mhm.
that use this 1099 that is could actually go back and blow up in their face. You have to go into the law. I would seek the advice of both a tax accountant and an attorney in regards to that for your specific business, because you want to make sure that you're doing that right. This happens far too often. In a lot of cases, and I've run across this, this person is not a 1090. You can't justify it like that.
Mhm. Mhm.
So just making sure, checking with experts,
Mhm.
and making sure that you're doing it the right way.
Wasn't there a
Um,
big company recently that had, gotten sued by the government for the way they were classifying uh, the people that worked at the company? Can you think of that company right now?
I can't, but
I
this
think it was
happens.
Uber,
Yeah, yeah.
the Uber and
eh,
Lyft people, right?
there are always blowbacks from companies like that. These are ongoing conversations, and pending litigation. But the best advice that I could give is, I'm not an expert on this, but what I would do is seek the expertise of, someone who deals with this every day, and make sure that if it is a 1099 employee, that you have a certain type of contract, and that you're not treating that person like an employee. They're not asking you for vacation. They're not asking, they don't have to come into the office. They have multiple clients. You want to make sure that these things are actually taking place. because it is your responsibility as an employer.
Mhm. And that's what I was curious about, right? Is I think it was Uber. Don't quote me on that, everybody. And I I could swear they had some kind of deal. Um, Uber and 299s. I think it was something about determining whether or not the people working for them were employees or could they qualify them as straight 1099, right? And I think
Mhm.
that, guess who that might have been brought on by? The taxi cab companies, right? So you may have a competitor. Think about this now. You may have a competitor out there seeing you're getting ready to jump into their space and they just try to litigate you out of what you're trying to do. Could that happen? Is that a possibility? You're getting ready to take food out of the mouth of someone, especially if you're going into a market that's kind of established and you believe you have a better idea.
That has a strong and you think about strong union representation too in a lot of those companies that you're competing with. So you have to contend with that. So it's not just you're going in there as an individual person competing in the market, but you have to look at all these other things. Well, could possibly the unions, these very powerful unions, see me as a threat, see the business as a threat, and want to come after and expose some of these things. So those are all things. That's why it's so important. And this is what I'm saying. I'm not saying avert the law. I'm saying know the law, seek counsel to get
Mhm,
the right thing to do and do the right thing. That's what I'm
mhm,
saying. I'm not saying, hey, you do all of this stuff to you know to hide from these different. What I'm saying is you seek the counsel to do the right thing.
mhm. So you're seeking an
Um,
expert that can show you
yes.
how to, okay. And it was Uber and Lyft. California had actually ruled that they have to treat their drivers as employees rather than independent contractors. So that was, I think, I'm looking at this article now from August 10th, 2020. They faced lawsuits from California Attorney General to enforce the law after they denied that the drivers classify as an employee. So, with that in mind, 1099, knowing what you do. This is something I'm doing some work for somebody over the summer, and I'm going to be doing some teaching. And it says, make sure you 1099 me, right? So this is just a little bit of advice for him because it's a brand new segment of his business. And I says, just make sure you send out the forms and all of that good stuff. It'll not only professionalize your business, but at the same time, it will protect us too, right? Because if you file one later and we didn't file it, well, now that's tax. That's a tax situation, right? And it was going to be more than $600. And there's some laws in there. Look into that, everyone. $599. There was an actual guy. I think he had this company called 599 Jobs or something like that, up to 600. It was so funny. And there's some companies that do that too, don't they? Even if you're working for a contract service. I heard this once that there was this big company. I'm not going to say their name because you'll know them. That you could work for. I think it was like up to 2 years, but right before that 2 year mark, you were laid off, and
Mm.
you were working through a contract place, and that kept them from having to declare you as an employee, even though you were working from like a temporary service. You could not work there up to a certain point that they would lay you off for a little while, and then you could come back, re-up, and the whole thing. Gosh, you talk about, well, now they had a professional tell them you have to do this. Otherwise, you're going to have to treat them, even though they're working for a contract place, as an employee. And then that means all of these other taxes. That means all of these other costs, et cetera, et cetera.
Now, Randy, here's the thing. As someone who has been both an employer and an employee, I think that we have to look at this from the standpoint of an employee. what are they going to think is fair? Are you going to churn and burn team members because they believe that you're treating them unethically because you're 1099ing them and not treating them like an employee, and they feel like they're an employee? So it's not just a legal issue, but it is an ethical issue as well as a human relations issue, because
Mm.
nobody's going to want to contract with you if you're constantly doing the wrong thing. You get a reputation for that, and that's what I say. The reason that I'm giving this, that we're talking about this today, isn't telling you how to avert the law. What we're telling you is these could become issues.
Mm-hmm.
And if you are not staying onto these, if you don't have expertise, if you aren't looking at all angles, you could run into a bigger issue than you think that you're averting.
That's some real talk. And again, we're not attorneys. We're just two guys masterminding about this, right? Two business guys are masterminding about this because it keeps coming up. Anytime I'm doing a entrepreneurship class, it comes up, right? That's why we had an attorney come in. We used to do it ourselves, and then we were like, well, we're not really qualified to talk about this from a legalese standpoint. And we just started bringing in an attorney, and he runs the whole class and talks about these issues, right? And it is always a very hyper class. Like you found out the other day, right? That people were like, hey, look, man, I need to talk more about you, sending you emails and stuff, because it gets them scared at that point. The moment you say, well, your structure isn't really providing you protection. Well, I thought that's what an LLC was for. That's why I pay $50 a year or whatever. No, it doesn't, because if you do this, then you've just pierced the veil, right? Or I had worked with a guy once who hadn't done his taxes and stuff well, right? And he the person at the IRS was telling him, we can pierce the veil of your C corp very easily. And she kept saying that we could pierce the veil of your C corp because you've treated it this way, that way, and it was like the business was too far gone for me to help him. But the point is that you now have entities that can come in and look at how you've treated that business. Was that business your little micro bank, right? How were you taking money out of it? And that's one of our next subjects is loans to self.
Oh, this is such a good one. This is such a good one.
You're
So
running your business. You
you're
got a
running your
couple of dollars
business.
in there. What do you do? Do you
So
just take the money, John?
no, no, no. So here's the thing. Anybody who's ever started a business has put their own capital into the business. I don't care if it's to buy business cards, a website
Right.
address, whatever it was, even that first $50 that you bought the business license with. You're investing your personal money. Um, what people end up doing is, hey, when my company gets to a place, I'm just going to pay myself more. Okay, but you just pay taxes on that. You paid income tax on something that you already paid income tax on, and that is not income. That is a loan. So make a loan agreement with yourself.
Yes.
Um,
This
if
is
you know,
huge.
if I'm going out and I'm buying a $3,000 mower to start my business, and I'm paying that with my personal funds, that is a loan. That's a loan back to myself. I make up a basic agreement from between myself as a person and my company,
Mhm, mhm.
and that company can pay that back without you being taxed, paying the taxes on that, the payroll tax.
Okay, now everyone hear that. Again, based on the fact that we've had our own businesses, John has run his own business. We make that statement. This is, how you need to treat it because it allows you some things. Now, of course, run that by, guess what? Your new team member, Mr. or Mrs. CPA, Mr. or Mrs. Finance person, economist, that then tells you, yeah, this is how you structure that. Now you see the value of having those folks that you can call up, right? Or have them as on retainer that you can call up and say, hey, listen, I need to make a loan to myself. And this week it's going to be $500. I'm going to loan it to the business. I need you to structure a payment agreement. So then when the business pays you back, get this. Now here's the mechanism. Now we're giving you the big idea, but the mechanism is, hey, I get to now pay that back. So that becomes an expensible event for the business. The business says, hey, I've made an agreement with this, John Doe, you, the owner, Jane Doe, you, the owner, that I will receive $500 from them. Right now, we don't want to get into too much of the accounting, how that goes onto the balance sheet and all that kind of stuff, but it's money inflowing into the business. How? Right? In your cash flow statements, it's going to show that it came in, it then got used what way. So that way, when you have someone look at that, they go, oh, this is a legitimate loan. And here's an agreement. Here's some reasonable interest.
Mm-hmm.
Absolutely. Your loan should pay interest. Hey, business, I'm giving you $500. I want 510 back, right? In this time frame. Now, when it comes back, that's what John's talking about. That's where you don't have to pay taxes again on it and all that kind of stuff. And it depends on how you have your business structure. Are you here's one, John, that I get all the time. It's like, are you paying your state taxes, your unemployment taxes, your self-employment taxes? That's a number, typically around 15 to 18%. And depending on how your business is structured, there may be a time where that becomes an expensible event. Oftentimes, you start
Absolutely.
that business, you bring money out, you've loaned it money back in, and you come at the end of the year and you look around and you're like, how am I paying all this money? I got this business. Why am I paying? Well, because it wasn't structured right. Because now somebody's come in and says, oh, by the way, you owe some self-employment taxes. I do?
Yeah, so
Yes.
so you're an employee. If you're an LLC, you're going to be paying those payroll taxes, in which you should be, because you're going to pay them. You should be paying them at the end of the year if you weren't already paying them.
Mm-hmm.
But this is something that you just get in the habit of doing. You set your payroll, you pay yourself a payroll check, um, and you automatically take out Social Security and Medicare, etc., and make sure that those get paid.
Right. How many people have you seen, John, running businesses, 2 or 3 employees,
Oh,
and they
so
didn't
many.
do any of that?
Another thing to consider too is, if I'm a business owner and I can't remember, I think it's different in every state, a certain percentage of a business, I don't have to pay workers' comp on myself, right? Well, if you're in a job where you're vulnerable to getting hurt, it, that's something to maybe consider. Maybe you should be paying workers' comp. It's not that expensive. Um, you also have to know, hey, what are my total FTE hours of my team, because that is going to play into how much
FTE, John, break that out. What does FTE mean?
full-time equivalent. So how many full-time individuals do I have? How many hours are individuals working? And they want to know by position, because
Mm,
when you look at insurance, if I am in office all the time, I'm going to have a different classification
mm-hmm.
than if I'm on a roof all the time, a roofer, or, or if I'm harnessed to a tree cutting branches. So you're going to need, and what is the separation of hours? Um, you need to know that. And if you're not keeping track, start keeping track, because you don't just want to throw a ballpark number, because you're audited every year, and then all of a sudden, and this is the thing, that for individuals that don't keep any bookkeeping measurements, this is where they get in trouble. Is that all of a sudden they're guessing at all of this information because they never kept any account of anything. They don't know how many hours Joe Schmo worked 3 weeks ago, let alone 9 months ago.
Yeah.
And what they were doing, what should that be classified as?
And that's that especially when the pandemic of 2020 hit, right? It's like if you had employees that then had to file, you hadn't kept records, guess what? In trouble. You have that
Are
person now,
so,
you position them badly because they're going to say, hey, well, show us proof that you worked here. Show us proof. And you go to person you had been working with, right? And maybe we've heard that term, been paying you under the table,
so let's say
and they
that. Let's
had
say
no
that.
records. They're not going to recreate those records for you because that puts them in a tax situation.
But let's say they're Honest Joe, okay? Honest Joe, you pay Honest Joe under the table $601, right? But Honest Joe puts that on his taxes, even though you don't send him a 1099 or anything.
He makes
Well,
sure that
he puts
Honest
that
Joe,
on his
pays it for
taxes,
because he's Honest Joe.
and then all of a sudden, IRS can come back to you and say, "Hey, hold on. Honest Joe says you paid him $601. Well, you didn't send a W-9 out,
Uh,
a 1099. Excuse me, a 1099. So they that's why it's so important to do all of these things above board, because here's another one: banking hours. A lot of seasonal businesses, this is what they'll do. If the weather's bad in the winter, and let's say someone works 20 hours,
mhm.
they'll say, don't pay me that 20 hours. Just hold on to it and pay me regular pay 3 months from now when I'm back to working full time. They're
Mm,
saying that because they're pulling unemployment benefits, right?
mm. Yeah. See, that's just
And
fraud.
that's a lot of seasonal businesses do this because they don't understand what they're doing. Is they never thought about it from that standpoint. They thought, hey, I'm just doing a solid favor for my team members, so hey, they can still have a little bit of hours work and still claim their
Mhm.
unemployment. You can't do that. It doesn't matter if they worked 3 hours or 40 hours. You have to report that, and you have to pay it within that time frame.
Mhm.
You can't bank that for until 6 months from now and pay that. So your team member can continue to pull unemployment benefits.
Wow.
That is illegal, and that happens all the time.
Okay, so guys, you're hearing it here. The two business guys are masterminding on whether or not you are structuring this business to win, or are you going to lose because of these factors? Are you going to lose because you don't have the right structure? LLC, sole prop, and understanding when to do each. Are you going to lose because you didn't get a commercial insurance and now somebody's coming and saying, hey, you know what? Cease and desist. And by the way, I think I'm going to sue you. Are you going to lose because you didn't have the partnership agreement that protected you against some of the things that could happen in partnerships? Are you going to lose because, hey, you didn't have your 1099 situation? You didn't determine if that person was an employee or 1099er, or are you above board how you're structuring that, making sure they fill out the W-9, and then you send them the 1099 at the end of the year. Loaning money to yourself, understanding how money flows into that business and how it can flow into your pocket. Are you doing that in the right way? Are you taking a loan from the business or from you to the business, and then when it comes back with the interest, but the business gets to expense it all? You know what I mean? Are you doing these things right? Are you going to lose because you didn't do that right? We want you talking, as the two business guys, as we're masterminding, we want you out there winning. So we want you to be structuring your business to win, not lose. Now, John, this next topic is commingling of funds. Yeah, come on, we get that all the time. John, I went out, did a job. They paid me $900. I got $900. Do I got 900
Yep.
bucks?
Nope. Nope, 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 nope.
What do
Saying,
I really have? Why? Because we
okay.
talked about it. Did you pay a little bit of tax out of that? State and federal, city in certain cases. Did you pay that tax? Oh, you didn't, huh? Did you set it aside? Oh, you didn't, huh? Okay. Right? Did you just take the money? This is what we hear all the time, John, especially with the small business owners, right? 900 bucks in, 900 bucks out. Now, you go to get a loan at the end of the year. You go to one of the, the Rende Capitals of the world. You go somewhere and they say, hey, we would like to see your books. Let me see how your money is flowing in your business because we have a grant that just came through. We would like to share with you, or we have a loan, very low interest loan or something. We want you to grow your business and you might be ready. So let's see your books.
Let me
Wait a minute. How does my
just
books look?
a mistake that accountants oftentimes make in stifling the growth of companies is um, making the business uh, look like it's taking a loss when it shouldn't be.
Mm,
And the reason being is, hey, if you're going out for like a government contract or you're getting a loan, that's not benefiting you. Yeah, that might be benefiting you, when you file your taxes on March 15th, but
not
that is,
forever.
yeah, that's not benefiting you if you're looking to grow your business and look for investors or bank capital or so contracts, so on and so forth. They
Mhm.
want to see that you are profitable and they want to see how much you are profitable by. So when you do that, you're stifling the business growth. You are or what you're doing is you're taking and you're averting a small front end problem, but you're
Mhm.
creating a bigger problem at the end.
That is so big, John, because when you think about investors, right? And I have people call me up all the time saying, hey, would you loan me X amount of dollars? And the first thing I say is, well, send me over the business plan. Send me over the something that shows me how my money is going to come back, when is it going to come back. But really what I'm doing, John, is helping them see how money is flowing in and out of their business and when they're going to be profitable so they can see what they're doing and make decisions on that. Right? Do I need to get the gold cap or can I use a black cap? Everybody else is using a black cap. And it's significantly cheaper on if it's a physical product or candles, whatever it is. So when they're asking me, I said, look, I don't care. I just want a return on my money. That's it. I mean, so send me something that shows me that if I loan it to you, it's going to come back and it's going to come back with interest. And I'm pretty a stickler on that. If you borrow 20 bucks from me, I want $22 when it comes back.
And Randy, I've heard this 1,000 times. Well, my accountant just set it up like that. Actually, this is what I'm making.
So
Well, that's not
what are you
what your
doing? You got
P&L
two sets of
shows.
books?
Yeah, that's not what your P&L shows. That's not what your end of year taxes show. It shows that you just lost $22,000.
Mm-hmm,
It didn't show that you're making money.
mm-hmm.
Make the numbers right. Even if you have to pay more taxes, you have to do it right because you're hurting your business in the end if you don't.
Yeah. And I understand the desire to want, because you're allowed, a couple of years, you're allowed losses, right? I get that. I bought real estate for a lot of years for that purpose alone. I wanted to make sure that I had expensible events as I built up the capital appreciation by way of buying property, right? And then there came a time where that the properties had to pay me, but they weren't structured that way. And it was time to sell them because I'm looking at them going, you guys couldn't pay me a wage now that you need to because the economy had gone to heck in a handbasket, blah blah blah. Right? I was not working a job, so the income that I was using the properties to write off that high income I was making was gone. Now that I'm looking at the businesses and the business, we've talked about this before. What can your business do? What more can your business do for you? Now you're saying in the business saying, well, I'm not structured that way. That property, you had it leveraged because it allowed you to do some other things, to buy more properties. So now you need me to cash flow out. I can't do it. So now that's when you look at it and go, well, it's time to sell. You can no longer do for me what I need you to do for me. You're looking at your business in the same way. Is this business set up as a success or a failure? Has it been set up immediately to be profitable? Right. And this is where I go back again, John, to the spreadsheet at the beginning. I'm starting all my entrepreneurs off with the spreadsheet. Right. And I just had one, call me up and says, hey, I'd like to borrow some money. I says, okay, here is, I sent them this spreadsheet called Profit Partner, created by an entrepreneur I know, right? And it tells you, you plug in all the businesses, it will, populate and tell you what you have to sell to make that business profitable. Period. That's why it's called Profit Partner. And it says, before I even consider this, I have to see your numbers in the Profit Partner spreadsheet. I have to see when you have to see it for yourself, but at the same time, I need to see when that money is going to be able to come back. And it will show you need to sell 24 items this month for this product. And if you have multiples, it'll tell you what you have to sell each one to make your big goal. Pretty simple, right? But how many of the entrepreneurs that we deal with don't do that? Don't have a spreadsheet that tells them. Now you got all this stuff plugged in, attorney cost, all the stuff that we talked about right now, insurance cost, all that plugged in, bam. Then it says, okay, how much are you charging for this product? I'm charging X. Okay, it says this is what you should sell every month. So that tells you every single day what you should be doing on the phone, trying to sell that amount. On your email list, trying to sell that amount. On your ads, trying to sell that amount. On your Facebook, it tells you every single thing that you need to do. That's how you're structuring the business to win, everyone. Right? Going right to that spreadsheet with all the costs that you got, taxes, everything, and it spits out a number. Right? And what happens oftentimes, John, is that businesses just start and they plugged in nothing, no salary for themselves. I'm not doing that. I want to at least, this business has to do this for me. 50,000 a year. Okay, that's, I'm making that at the job. I want to leave the job. Okay, plug that in. Now it says, oh, you don't have to sell 24 of these things. You got to sell 104 a month. But it informs you. And that's one of the benefits of having a spreadsheet, whether it's Profit Partner or, whomever else. It is, you have it structured so that all these costs can be seen. And then if you're going to pay yourself out, right? If it's going to be a salary every week, or you're just going to take bonus, whatever it is, you can see it. And then you're informed. You go forward, and now you've got a business that when you go to a lender and they go, okay, it's reasonable. You don't have to have a lot of costs, John. There's a lot of software out there right now, isn't it? Whether it's QuickBooks or Wave or whatever it is.
There are so many free and that's another thing. A lot of businesses don't use some of these tools because they think they all cost. Do your research. There are tools out there that do not cost, or they're less cost than maybe the most popular ones. But you need to do this. You need to set yourself up for success. So many businesses are running blind. And what happens is, and I had a gentleman tell me, hey, I just collect my receipts and I throw them in a corner, and at the end of the year, I give them to my accountant. You're telling me for 12 months, you don't know if you're winning or losing? You don't know if, that job paid if I did a profit?
Accounting. Right. Simple accounting solves that.
I'm not doing a field report saying how many hours I spent at that job in comparison to what was, how much I made. I mean, you should know how
commingling their funds, aren't they, John?
Yep. Material expenses, not having that separated by project, by job. You need to do this, or you don't know you can't leave it to the end of the year.
Let me play devil's advocate, John. I want to play devil's advocate. I want to push back against all that. But John, That's taking the joy out of business, man. I don't want to
What's
talk
gonna
to you. I don't want to talk to you, business coach, because you just took all the joy out of why I want to start this. I don't, I'm not qualified for that, John. I know I'm supposed to wear all these hats, but you know what? I'm a technician. Now in this, everybody, if you look at what E-Myth Revisited by Michael Gerber, when I first read the book, I didn't like it. And I didn't like it because, well, guess what? I'm a free spirit. I didn't like it because it was structure, right? So I was like, you know what? Forget you, Michael Gerber. But quite frankly, as I've gotten older, I'm looking at this, I'm going, man, this dude was dropping science. So he talks about this, right? He talks about what kind of business you are, what kind of person you are in the business, the entrepreneur, the manager, or the technician. Now, the technicians of the world, they just want to do work. They want everybody out of the way. They just want to get in there and bang it out. The manager, different, right? The manager is the one, like, John, you're a manager. You're telling them, do you need to do this? I'm the entrepreneur. And I'm going, no, I'm an eagle way up here, flying high, looking down. And you're saying, Randy, you got to make sure we do this, bro. And I'm going, but that keeps me from flying, John. Let me play devil advocates. How many people you believe that are in one of these spaces, right? You've read probably the E-Myth, right? And E-Myth Revisited, the entrepreneur, the manager, the technician. How can you wear all those hats and do your business well?
And that's why the partnerships with the individuals that we talked about earlier in the podcast, the 4 individuals, that's what you're doing, is you're surrounding yourself with these different strengths, even if you don't hold them yourself. But there's a reason why 10% of businesses make it 10 years. There's a reason why that just as many businesses open every year as they close. And most businesses don't make it. They don't make it past 3 years. So yes, is it not fun for everyone? Yeah, I absolutely. There are parts of life I don't necessarily find it fun to brush my teeth, but I do it every day because I know
You don't
that if
want
I
your teeth
don't brush
falling
my
out, right?
right, and it's the same thing with you not keeping accurate financials. Your business will fall out. Your business, the bottom will fall out, and you will no longer have a business. And guess what? You're going to be working that 9 to 5 again and paying back debt because you just lost everything.
Oh, I know. I got a buddy of mine now that had a really nice business back in the day, and he right now pays back a lot of money to the IRS, to all these people that because didn't have the business structure right. And there was a time where it was a lull in all kind of business, and its corners were cut. And not when you're working with employees that are positioned to file unemployment, that are positioned to get these PPP loans or whatever it is. Right now, that guy works a job, he's happy because he doesn't have the pressure of running a business and all the its rules, but he doesn't have freedom anymore either. I call him up, hey man, I gotta go to work. Oh, okay. Can't go to lunch? Nope, gotta go to work. So stuff like that, right? If you want that freedom, everyone, if you want that lifestyle, whether it's laptop lifestyle or not, keeping a track of these things, setting it up properly at the beginning, just so you can see something simple things. Sometimes I think I can't. I read an article once about Sam Walton had kept, he had a couple of stores and he kept it all in a 3-ring binder, kept all of his notes, bought stuff for company. This is what it cost. Company made X amount of dollars. He kept all of that until he professionalized it, right? Until he got the accountants and stuff like that. But he kept some kind of notes. Like you said,
Mhm.
how do you know what you just bought was what you should have bought? Could you have bought cheaper somewhere else? You just, kind of go in and says, well, I didn't make the same kind of business. I didn't do the same kind of business last month, but I'm having the same kind of cost. Well, you just hurt your business. Your cost should adjust down as the business adjusts down the best you can. You being aware of that, John, getting and putting them in, putting the receipts in a box, which I've done that too, right? It used to be like that. Boom, put them in a box. Now I didn't send it to the accountant. I would sit down at a certain time of the year and I would take those receipts out and I would look at them and then, do my thing. Here's the property A, property B, property C, expenses for each. And it was a pain in the butt. It was, and now we got all these apps where we could just plug it in, pull down. That I believe, John, I think if you saw in a day in the life of an entrepreneur, they don't do that.
Yeah,
You got more
there's
shoebox entrepreneurs than
there's
we
apps where you could
realize.
take a picture of it and just enter the code. This is for this, and then it automatically goes into your accounting software. Boom, it's done.
That you
And now I'm
pay $24 a month for. That if you don't plug that in and you forget to pay it, it's not a part of your expenses. You forget it. Stuff like that, man. As an information entrepreneur and an affiliate marketer and all the stuff that I do, I got a lot of stuff going all the time. Plate spinning all over the place. Gets kind of dizzying sometimes. But, some of the things, the Wave app helps me, when I'm using that. Simple things that spreadsheet that I use, Google spread, you know what I mean? Simple things that you can use that just keeps track of this stuff and keeps you out of not knowing. You want to buy a new piece of software? Okay. What is that going to do to the profitability of your business? Plug that into, you got a spreadsheet you plug it into? No, you don't. Okay. So you need to incur that cost. At the end of the year, like, why am I making no money? I'm not making any money. Got all those costs. Something hits your bill. You're like, what is this bill? I forgot. It's not in your spreadsheet. And because it's not in your spreadsheet, you didn't know you had to sell one extra product to cover it with your profit amounts in. John, here's a question for you. As we wrap this up, we've talked the right structure, commercial insurance, partnership agreements, 1099s, loans to self-commingling, trusts to protect the business. We've talked about these things. What's left? Poor entrepreneurs listening right now are just going, I'm just going to work for the man. I'm just going to work for the woman. Whatever.
It's never ending. Things change. There's compliance type issues. It depends on industry. Industry base is really going to be a key contributor to
So
that.
what's the upside? Why should
The
I go into
ups
this business thing?
the upside is this something that you're passionate about, that you want to do, that you feel like you need to do or have to do? Honestly, you don't have to do it, but you chose to be in business.
Yeah.
So if you're going to choose to be in business, it's hard. Business is hard. That's why not, that's why 90% of businesses don't fail.
There
I
is.
mean, that's why 90% of businesses don't succeed. If it was easy, everybody would be doing it. And the
Remember,
reason,
go ahead.
yeah, the reason the attrition rate is so high is because there is a lot. I mean, there's so many different things out there that we could go on for days. But look into your industry. What are some of the key concerns? What are the compliance issues? What are your competitors doing really well and being recognized for, and what are they not so much doing well for? At You want to set up processes that make your business successful
That's
long
it.
term.
Processes and systems. That's what the E-Myth was all about. He's saying, in essence, and John, this is what it was hard for me because as a free spirit, I was like, man, I'm not doing that. Right? He says, from the beginning, and I'm looking at a piece of paper here that has a summary. He says, from the beginning, set up these systems, processes, these anything that you're doing. He talks about creating a notebook on how it's done. Now we could just make a video, right? I advise entrepreneurs to do that. So that way they're immediately replacing themselves. So when they want to go and live the laptop lifestyle, they've got somebody running the business based on what they've created for them. This is what you do if this situation happens. When somebody's onboarding, you do this, and here's where you'll find this, and this. You can put that all in a video where they can rewind. I tell people this all the time. Do that. And you can get that translated into a manual, but they have it. Video
Now,
A shows you this. Video B shows you this. Video C shows you this. Just go look at it.
Randy, the last thing, just one more thing before we sign off. I had an individual say to me this week, "Hey, I want to grow, but I can't find perfect, pretty much people who are trained the right
Yeah.
way."
Yeah.
And I said, if you want to grow, you are going to have to establish those systems where you have your own training program.
Yep. Yep.
Because what ultimately happens is, let's say someone has experience or training in something, they've picked up habits, bad habits, maybe things that you don't necessarily want to be a part of your business. But if you're training them the way that you want them to be trained. There is going to be a time that you have to let go if you want to grow your team, because you cannot be with every person standing over their shoulders
Right.
every single minute of the day. You have to give space.
So
You have
key.
to have trust. There's going to be mistakes. There are going to be mistakes. There's going to be mistakes that cost money, but you'll never grow if you don't get to that point where you can just release it.
Right. You won't grow if you won't let go. Right. It's something that Gerber talked about, right? And that's why I'm really harping on this, because again, a book that I didn't like when I was free spiriting in the business space, and now I got some more structure and I see the wisdom. He says here, if your business depends on you, then you don't own a business. You have a job, and that's a direct quote. And it's the worst job in the world because you're working for a lunatic. And that's you, right? The lunatic is you because you're running around acting like a crazy person. You got no systems in place, no if thens in place, right? Now, I like to use a lot of software, and I've been going more heavily into software type things. And you're going to see a lot more of this. The pandemic of 2020 really taught businesses that are absolutely getting hammered and struggling with getting people into the business, that if they had more and more tech and more software and stuff like that, they could run the business could run, right? And that if they had done more outsourcing, stuff like that, some businesses are saying they made more money, had more fun, because they didn't have the cost of having, let's say, a restaurant open. They did deliveries and they made a pile. They just had
Those
their
who
cook in the
pivoted,
back and maybe one employee, and they made a bundle.
those teams that pivoted and developed processes to make themselves more efficient, they succeeded. There was a number of those apps where you can order certain things, supplies online, that over the past year and a half, not year and a half, but year and a quarter or whatever, they actually changed what they were doing because they saw the benefit in reaching out into other markets. And so what they did was they changed their processes to adapt to the environment that our economy was
Right.
in.
Now, you heard John say that, and I'm just going to follow up with what something again from the E Myth Revisited. Your job is to prepare yourself and your business for growth. That's your job. Here, prepare your business and yourself for growth. This when the companies, John, they've taken the entrepreneurs, energy, vision, drive, and all of that, and now it's working. And that entrepreneur is in such startup mode that they can't transition. Got a problem, right? So preparing yourself for growth. How you now have to position yourself to grow the company, because it's at a different level. It's gone from 0 to 1 million, right? And he calls it infancy here. Infancy, the 3 phases of growth: infancy, adolescence, and maturity. Does that sound familiar, everybody? Right? It's like kids, right? Come on, your 9-year-old and your 14-year-old, and your 20-some-year-old are different. You know that. At the 9-year-old, you can't, they can't babysit because they can barely take care of themselves. Maybe at 14, they're better. Right. And I think the law says at 12, if you're mature enough, they can babysit. But we know some 12-year-olds that should not be taking care of kids. But my
You know,
point here
some
is that you go from
24-year
infancy.
olds, they shouldn't be taking care of
Yeah, they shouldn't
kids.
either. Right. So it is the levels that you're now preparing yourself and your business to grow to. That's what you're looking for. Right. And I wanted to end with this quote here. Elon Musk says, starting a company is like eating glass and staring into the abyss. So you're not only eating glass, but you're staring into the abyss. If you, I think apply some of these structured things at the beginning. And that's why I think, John, you had so many people saying, tell me more about this. Well, they really wanted accountability. I guarantee you, I'm being paid right now as a consultant for helping business owners stay accountable. These are business owners that when you call them, they're not getting back to you in for a couple of days. They know that's a problem because their employees and their customers are saying it's a problem. Hiring me to make them accountable, right? Hey, I know I should be doing this every week, but hiring me to make them accountable. Think about that for a minute, right? And that's like you talked about. You even said it here. You'd have a commercial attorney, a business coach. This is like the first ever you start hearing about having that person as a part of your staff. That's that accountability partner, really. That business coach is there to say, hey, look, I'm not in your business. I'm at the 30,000 foot level. You're messing up, buddy.
And here's the thing. This is the power of that. A business coach, they're not employed by you, so they do not see you. I mean, they're paying you as a contractor, but they're paying you to be honest.
Yeah. Or you're paying them.
So yeah, yeah, you're paying them to be honest,
Right.
so they can tell you. You want them to tell you the truth. You want them to tell you, what are my weaknesses? What are the things that I need to work on? It's not like you're saying to the person that you hired that's working next to you every day, that's scared to 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 expose your flaws or anything, or I
Mm-hmm.
would, or come up with suggestions. A business coach is for that. We
Mm-hmm.
actually do that because we want a business to be as strong as the business could be. That's how we get paid. If we're not giving that advice and businesses are folding, we're not really a good business coach, and we should probably step out of the business. But if we are giving advice that's hard for business owners to chew, but when they do it, they succeed, that's when you know that you're benefiting. And that's why it's so important that a business owner has a coach who is like that is going to point out those things, that is going to challenge you, and make your company better.
Gosh, this is so good, man. I'm telling you, I'm glad that you chose this topic to talk about, and we were able to come in, and I had some material to drop in here. One of the last things, it's like, the guy says over at eMyth says, go to work on your business rather than in it, and ask yourself the following questions: how can I get my business to work, but without me?
Yes.
I'm gonna leave
Ultimate
it with
goal.
that. How can I
Ultimate
get my
goal.
business to work, but without me?
It's pretty miserable if you can never take a vacation or do anything. The goal is that your business operates without you,
That's
that you
it.
have set up such good processes, systems and processes, that your business operates without you. You can go to Europe for 2 months with your family and not worry about, is the business going to be there when I get back?
There it is, everyone. You've heard it from the two business guys as we mastermind it on, creating that successful structure to your business, right? And we just wanted to come on because this was a fire. And John was getting too many people saying, tell me more. And says, we gotta talk about this. So this is how we have helped you, hopefully today, put out the fire in your business, right? Are you running that business? Is it structured to win or lose? And we hope that answer is win. Guys, we'll talk to you next time. We've enjoyed this today, John. I've enjoyed talking about this subject matter, man. I wasn't feeling the best today, but I came on anyway. And I tell you what, it was just what I needed. It woke me up. Woke me up, everybody. I
Cool.
hope it woke you up too. Thank you, and we'll talk to you next week, everyone. We'll have a new topic and a new thing to mastermind on. Let's talk then.